Good. Okay, 7:29. So we just wait for 3 more minutes and we will get the party started. Hey, so good evening, everyone. Time is 7:32. Yes, as promised, I will start this event. So once again, thank you so much for your patience. And great to see so many of you here. So give yourself a pat on the back. So very good timing. Yes, the REITs price have went up a bit. But I don't think it's still too late now. Probably it's about the right time, to really take a very close look at the REITs at this point in time. So good that you are here. Now, before I start, it would be great if I could, have a sense of the profile of the audience so that I can pitch the session more correctly. So do me this favor by keying in 0, 1, or 2 into the chat. Please help me key in 0 if you are totally new to investing, never bought a stock before. Keen 1 if you have started investing, bought a stock but never bought a REITs before. Key in 2 if you already have bought a REITs before. 0, totally new. 1 is you bought stocks, never buy REITs before. 2 is you have buy REITs before. Oh, okay, great. Okay, good. So I think what I'm seeing is mostly 1 or 2. Okay, good. Then maybe I can discuss something more in depth. Okay, looks like the majority is already a REITs holder. So for those who keen 0, not to worry. It's definitely not rocket science. But of course, if you have questions, I'll be happy to take them after the session. Okay, so good. Let me just get started. Share my screen from the beginning. Title for this evening. So we're actually going to spend about maybe 15 minutes to cover the content. And hold on. Let me just check the setting. Okay, good. So we're actually going to spend about 15 minutes to, 50 minutes to cover the content. Then I'll leave about 10 minutes to do Q&A. So of course, topic for today, discover hidden gems in the REITs market. Quick intro, my name is Emin. CFA is my professional designation, stands for Chartered Financial Analyst. It's a globally recognized investment designation. I am a trainer with SGX Academy. I specialize in this area called FA. FA stands for Fundamental Analysis. So good. So looks like we have some more experienced investor here. So help me here. If you don't want to use FA to analyze stock, what is the other methodology you can help you to analyze your investment? So there are basically two main strategy or methodology. Okay, one is FA, the other meta analysis. The other is, thank you so much, TA. TA stands for technical analysis. So basically TA are the people that use charts. They look at charts to help them to make investment decision. Okay, chart say buy, they buy, chart say sell, they sell. So for me, I use FA. Okay. So FA, we don't use charts. One very good way to explain what FA here is we don't buy stock, we buy into business. So if let's say when I buy REITs, okay, from an FA perspective, what exactly am I buying? Can someone help me here? Okay, if I buy REITs from a pure FA perspective, I'm actually not buying a stock, but what exactly I'm buying? Anyone can help me or anyone give it a try? Thank you so much. So when I buy REITs from an FA perspective, I see myself as a property investor. So in fact, people ask me what I do. I say I'm a multiple country property owner. I own properties in at least 16, 17 countries. So I'm not bragging. If you want to be like me, all you have to do is just have a basket of REITs. Then you have own property all over the world. So to me, when I buy REITs, what am I seeing? I'm actually seeing that I am joining a lot of people together. Okay, pool our money together to actually own property. So I always like to tell people I actually own Raffles City. Okay, and I'm not joking. If you want, you can own. If you want to own Raffles City, which REIT do you have to buy? If you want to be the owner of Raffles City, which REIT do you have to buy? Anyone can help me here? Raffles City, Raffles City. Okay. CICT. Thank you so much. Also, I always tell people, hey, Raffles City, the second floor, that toilet bowl is mine because for more invested, probably that's the one I can pay for. Okay, so this is how I visualize as a FA. Now, so if you want to use FA perspective, we have to agree with these two methodologies. Number one, we are always long term. Okay, so especially for REITs, that means if you use FA to analyze REITs, that means you must be prepared for long term. What is long term? 3 to 5 years. In fact, for REITs, I'm happy to hold for 5 to 10 years. So every time I buy REITs, I'm prepared to buy for long term. I'm not there to do trading. Okay, I'm not there to do trading. So if you ask me, hey, the price has went up, is it a good time to sell? Wait for time to after wait for it to come down to buy back. Okay, sorry, I can't help you. So that one, maybe you want to use the TA to help you time perfectly. So for me is very focused on long term. Okay, when I buy 5 to 10 years. Okay. For REITs, for normal stocks, it's 3 to 5 years. But for REITs, I'm happy to hold for 5 to 10 years. Okay, the other thing for FA is we are very very objective specific, very specific to objective. Okay, like for example, okay, if you actually buy REITs, it's actually very good for one particular purpose. Okay, can anyone help me here? What is actually REITs very good at? Anyone can help me? If you buy REITs, usually you buy REITs for what? Okay, thank you so much for dividends. For dividends, thank you so much. So for those who don't know what's dividend, basically you buy the property rent out, rental collected, give to shareholder, become called dividends. Okay. So I myself, I'm actually quite most of my funds actually in REITs because I'm in the stage whereby my investment objective is to be financially free. Whereby I hopefully one day my dividends cover my expense. Then I no need to work. Okay, I can live happily ever after. Okay, so if you have objective like mine, really want to create passive income, really want to be financially free, then of course REITs is actually very useful for you. This from an FA perspective. But let's say, for example, you say, oh, you want to get rich overnight. You want to be a millionaire overnight. Then of course maybe REITs can't help because REITs we are looking at return 5%, 6%. Maybe the casino can help if you actually want like 100, 200% overnight. Okay, so two things about FA. Later you'll see more. Okay, one is always long term. I'm not here to do short term trading, and the other one is very objective driven. I also do other courses as you can see here. So looking forward to for you to join me in some of my other programs. Hopefully today I can impress you enough. and hopefully I can actually share more of my knowledge with you. Okay, standard disclaimer. Um, all this can be summarized into two sentences. Make money, be happy. Lose money, don't scold me. So purely education. What I owe you today is the process of how we analyze stocks. I may mention some company names, but definitely not stock tips. Okay, I will not be able to answer question during my presentation. I don't think I have time for that. So please, if there is any question, please use this Pigeonhole platform, as you can see on the screen. And thank you, my colleague, for actually pasting the information onto the chat. Okay, so key in your questions here, pigeonhole.at, enter the passcode, or either that you can scan the QR code. Use this platform, Pigeonhole platform, instead of the WebEx chat because your question will get scrolled away. So I may not be monitoring the chat also. Okay, so if you want your questions to be answered, so this is the platform, pigeonhole.at. Okay, good. Let's get started. You are going to invest 1 hour of your time with me. So please take something back with you. So what are the three things you need to learn from me today? Okay, factors behind REITs movement. So before we actually look at the gems, so title is, what are the gems in the REITs market? Before we do so, we have to understand what are the factors that affect the price movement. Okay, then very important, you learn how to do valuation. So from this is very FA thing. So we believe that everything there's a fair price. Okay, there's a fair price to everything. Even human has a fair price. So with the fair price, we can know whether this thing is cheap or expensive, or what we call over or undervalued. Also, you actually learn a bit of valuation, very simplified way to validate REITs today. And of course, as I mentioned also just now, we are very focused on objective, especially from an FA perspective. So we must be very clear what is the strategy lah. What's the overall strategy we are trying to achieve with REITs to achieve our objective. So basically, my point is, REITs, or in fact stocks, is not just simple about buy, sell, buy, sell, buy, sell. Not so simple. Usually, there are very clear investment objective and how you structure your strategy to meet the objective. Okay, so this 3 points for the next 40 minutes. Okay, good news, good news. This is the REITs index. REITs index, you can see that it's bouncing back. Finally, I've been so angry with REITs for quite a while. Like for example, okay, this period, I hope you can see my arrow. 2020, what happened? What happened in 2020 that caused the REITs price to plunge? COVID, right? Okay, thank you so much. With COVID, if you all can remember what happened during COVID, people are not going to offices. The malls are closed. Obviously, the price is dropped. Okay, makes sense. Totally makes sense. But in 2023, 24, people are doing revenge traveling. People are going back to offices. The retail malls are packed like crazy, and yet the price are like that. So I was so angry. How can that be? So I'm finally it's coming back. Okay. So of course, as I mentioned just now, I personally think that there are still rooms to grow. Hopefully, I'm right. Like everybody else, I can only predict, I can only forecast, but I don't know what's going to happen tomorrow. Okay, I personally will feel that's opinion. But at the same time, one very important point. Okay, I think down here I want to spend some time. Okay, make a guess. How many REITs currently? How many REITs do we have listed in the stock market today? So I play this game so that you all can remember better. If I tell you, you will forget already. Okay, so make a guess. 40 plus. Okay, 41. Less than 41. Less than 41. How many REITs do we have listed in the stock market today? Okay, 39. Congratulations, Peggy. Wow, you are very good, Okay, you probably have attended my webinar. Kim Wong, of course you know. Okay, so there are 39 REITs. So my point here is this: yes, from a REITs overall perspective, it's going up, but it doesn't mean that all the REITs will go up. It's still very important. Out of these 39, you must choose carefully. So to help you choose wisely. So firstly, we have to understand what are some of the factors that will affect the price movement. What will actually cause the REIT price to go up? What will cause the REIT price to come down? Now, to do so, one way we can do it is doing a quick review of some of the REITs for first half. Okay, or in fact, for the first three quarter, almost first three quarter of 2024. So again, you can see there are some REITs, the price went up, like Capital DC REIT actually went up by 16%. Whereas there are some REITs, the price went down. So again, doesn't mean that, oh, overall market up, every REIT price will go up. Not true. As you can see here, some went up, some went down. So of course, what I've done here is this: I only pick up those with very significant price difference. That means more than 10%. So of course, there are in between. There are some REITs that went up by 5, 6, 7%. There are some REITs come down by 3, 4, 5%. Okay, so for the purpose of this analysis or this study, I only pick up REITs that have very significant price difference, which is more than 10%. So from here, hopefully we can understand why, how come this REIT went up, why this REIT come down, and from there we have to be careful. I know we understand what the factors that actually can affect the REITs movement, price movement. Okay, let's look at Capital DC. So what happened for Capital DC here is this. This is in 20. This was last year. Okay. Sorry, I forgot to put down the date. But I think you go to Google. This was last year. So Capital DC have a spate of negative news. As you can see here, Capital DC REITs have to demand 9.1 million late payment from China data center tenant. So basically, some of the tenants are actually not paying the rent. Then they have some other small small issues here and there. So if you actually just go and Google Capital DC REITs news 2023, then you see a spate of negative news. So this probably has actually caused the price to drop in 2023. Okay, in 2023, probably the Capital DC price drop is because of all this negative news. Okay, but then it could have been oversold. It could be oversold. That means drop too much. Because as you can see, this year, this is the first half result is out. Okay, this year you can see that the actual performance actually improved. Can you see? If you compare first half to the what do you call that? The previous half, the income actually went up. Can you see? The income actually went up. The DPU also went up. Okay, so maybe this is one good reason why the price actually rebound faster. So that means what I'm trying to say here is this: how come the price went at 10% is because number one, last year it was oversold because of all negative news. But in fact, all this negative news didn't really impact the performance of this REIT as per what people expect. When people were thought that, wow, with all this news, maybe the income and the distribution will keep coming down, but that didn't happen. So in fact, it actually turned up. So that's why the price actually have actually strong rebound back. Okay, so my point here is this: end of the day, what will actually affect the price is what this performance okay, the performance of the REITs in terms of what their income, or usually I use the thing NPI, net property income. Okay, and the DPU okay, the DPU, which is the dividends per unit. So these are the reasons why price actually go up. So if you ask me, now that's what I'm trying to say in this slide here. Okay, now let's try to understand why the prices for that 3 weeks came down. So we can see that CDL Mapletree, why it came down. Okay, I did mention just now that okay, one of the reason price go up. One of the reason why price go up because the performance improve. But CDL case, if you actually look at it carefully, he also improve what? Can you see the property income improved, the profit actually went up. Then how come the price still drop? Okay, if you actually dig deeper, you'll realize that there's actually this thing called interest cover. Okay. So basically, okay, these are measures. There are two main measures to see whether the REITs, what we call, are they financially healthy or not, or are they taking too much debt? Basically, are they taking too much debt? Okay. So this one is a bit subjective. Personally, if you ask me, if the gearing is less than 40%, is okay. Okay. Gearing less than 40% okay, that means not taking too much debt. Okay, to pass my interest cover test, okay, I need interest coverage ratio. By the way, interest coverage ratio is the net property income divided by interest costs. Okay, uh, the net property income divided by interest costs. I need this number to be 3 or above 3 times. Okay, of course, in this case, it didn't pass my test, which means to say, the interest cost for this REIT as compared to the income is actually very significant. So this is probably another reason why this REIT, the price actually dropped. So again, why are we doing all this? We are trying to understand why price go up, why price come down. So based on these examples, what I'm trying to say here is this: why price go up, okay? Or what will affect the price? Of course, the net property income, the DPU. That is one of the main thing that will affect the price movement. Okay, the other thing that will affect the price movement, in my opinion, is actually what we call their debt ratios. Okay, or their financial ratios, these two main financial ratios. If you ask me, I think this is one main reason why, okay, the price for this REIT came down, okay, because this ratio is not in a very healthy state. Okay, can you see that despite the property income go up, okay, because this ratio is not healthy state, the price still go down. Okay, hope it's clear. Hope you all understand what I'm trying to get at. If you don't know, okay, please ask question on the pigeonhole. At the end of session, I'll be happy to repeat again. So we already have 3 factors here. Identify 3 factors that may affect the price movement. Now let's look at the other REIT. Okay, Maple Tree Logistic Trust. You can see that the MPI, net property income, actually this is 24. Okay, actually came down. Can you see actually came down? The DPU actually came down. So again, it actually is in line with our first observation. So basically, when the MPI or DPU came, is one of the main determinant for the price movement. It actually come down. Okay, it is actually negative. It's actually bad for the price. Okay. So even just on DPU alone, okay, you can see even DPU alone, okay, it probably this is the reason why it actually came down. Now, another reason that the price came down is also because if you actually search the news, Maple Tree Logistic Trust actually had a negative news this period. So what happened here is this: it was actually taken out from index. Okay, there's actually this thing called the benchmark index. So this REIT is actually taken out from the index. So of course, once the REIT is out of the index, the demand for the REIT will reduce, and definitely demand drop, the price will also affect it. So the point I'm trying to put across here is this: the news may also affect the price. Or put it this way, maybe there is nothing really fundamentally flawed with the REIT, but because it's actually being taken out from the index, which affect the demand, okay, that's why the price drop. Okay. So having said that, if let's say based on the Keppel DC case, if let's say news cause it to drop, if let's say the REIT is actually still good, but because the negative news the price drop, then it may be a good chance to buy So basically, how do we know whether is it cheap or expensive? Later I'll talk more during the valuation part. Like now the dividend yield is about 6.6%. is this good or bad? So later we'll see from the valuation exercise to help you assess okay, whether this REIT now is actually cheap or expensive. Okay, next, okay, this is the last one. Okay, Capital China Trust, same thing. The price actually dropped by more than 10% from beginning of this year to September. So again, you can see that the net property income has dropped. Okay, revenue also has dropped. Same thing, DPU has dropped. And okay, for Capital China Trust, so for those who have actually sort of like follow the China economy, so in fact, the economy hasn't been doing well. You can see that the DPU has been dropping consistently, lah. Okay, and we don't seems to be bottom out yet, or we don't know whether you have hit the bottom yet. So again, this is the reason why the price of this REIT has dropped. So what I'm trying to say here is this, from the case study of these four REITs, okay, I'm trying to identify what are the key factors that influence prices. So we have noted that, the revenue, the net property income, and DPU. Okay, in fact, these are the three, or in fact, the main two factors I will actually look at to assess whether, um, the REITs have a potential for price increase or decrease is actually the MPU and DPU. So obviously, if let's say they are expected to go up, I expect the price to go up. And of course, if I expected to come down, then of course I expect the price to come down. So if you ask me, I think these two are the main determinant. So as we can see from the CDL case, the what you call that, the CDL Hospitality Trust case, okay, the financial health, gearing ratio, interest cover may also affect the price. If it doesn't meet at least my criteria, okay, may have negative influence on the price. So obviously, valuation will have an impact of the prices. So of course, if let's say it's oversold, that means the REIT is undervalued. Then there's a chance it go up. And of course, if this is true, if let's say it's overbought, then the REIT is too expensive, then it also will come down. Okay. Then obviously, just now we have seen news would also have impact on the price, but it may overreact lah. So how do we know whether we overreact? So again, valuation exercise is actually very important, which we actually do very soon. Okay, so can do valuation analysis to assess if price is overreacted. Okay, so this is end of first part. Hopefully, y'all can get what I'm trying to say. If you are confused, need clarification, okay, please key in your questions in the Pigeon platform. If it's too confusing, okay, what I'm trying to say here is this. We should focus on these 2 points, MPU, DPU, to have a sense of whether the price will go up or come down. And of course, we may only want to buy REITs that are good financial health, so that, to prevent that the price come down because of poor financial health. So these are the 3 main points here. But of course, if the rest, you can get it, very good. Okay, good. Let's move on to the next point. How do we know whether the REITs are cheap or expensive? Okay, good. We can have a little game here. Now, which is the better way? Okay, maybe better is not a good word. Which way would you use to value REITs? What is your preference? Okay, maybe this is better. What would be your preference to see whether REITs is cheap or expensive? Do you look at the dividend yield, or do you look at the price to book analysis? Anyone can share your opinion. So no right or wrong. No right or wrong. Okay. To each his own. Okay. It's just like, for example, how do you know whether this car is cheap or expensive? Different people do it differently. So which way would you actually do it? Would you actually look at the dividend yield or price to book? Okay, good. I think about half. Let's see. I think it's about half. PB, dividend yield. Okay, it's about half. In fact, yeah, I think more towards price to book. Okay, so personally, I will use dividend yield. So reason because, okay, end of the day, who are the main investor for REITs? Is it retail investor like you and me? Or is it institutional investors, big corporation like CPF, like the banks? Okay, who are the main investors? Retail investors or institute? Okay, obviously it's institution. So for institution, mostly when they buy dividend, buy REITs, it's actually for dividends. Okay, they are not there to trade. Okay, they actually want to buy whole and just collect the dividend. So I believe like for example, corporation like CPF. I don't know whether they have REITs or not. I believe they do. So it makes sense for them to buy REITs, so that as long as the dividend is higher than the CPF rate that they actually give, then we just buy whole and keep the REITs. Okay. So since the objective for most investor is for dividend, so if you ask me, dividend yield actually makes more sense. So price to book makes sense if let's say the intention is to sell the underlying product. So if let's say for example for developer companies, okay, whereby the objective of the company is to sell the property, then I look at price to book. Because why? They want to sell the book. They want to sell the properties. But in this case, why people buy REITs is actually more for dividend. So I would personally use more dividend yield analysis to see whether the REITs is cheap or expensive. So but then again, like I said, pricing is a subjective exercise, no right, no wrong. As long as it works for you, good enough. So dividend yield makes more sense to me, works for me, that's why I'm sticking to it. So I want to introduce you to this thing called the fair yield. So for stocks, we look at fair price. Okay, so let's say for example, I'm able to calculate the fair price of Singtel, for example. Okay, please pardon me. Assuming I have, like, say Singtel fair price is $5. And assuming that now market price is 350. So is Singtel over or under value? Okay, this is of course just a sealed, just a fake example. Assuming Singtel fair price is $5 and now the current market price is 350. So Singtel is overvalued or undervalued? Under. Okay, that means it's actually cheap. Then there's a chance for the price to go up. So that's how, as a FA, how we do valuation. We believe there's a fair price. But for REITs, I prefer to use this thing called the fair yield analysis. Fair yield. Okay, for reason I mentioned earlier, because most investors, they buy for dividend. Now, assuming that, let's say, I believe that the fair yield for this particular is 5%, for example. 5%. And now current yield is actually 6%, for example. 6%. So in this case, this REIT is cheap or expensive. So fair yield is 5. This REIT current yield is 6%. So this REIT, is it cheap or expensive right now? Okay, this one is a little bit, okay, I hope get more answers. Maybe this one a little bit more confusing already. Okay, I need more answer for this. So here's the question. Assuming that the fair yield is 5%, and currently this yield is actually, this REIT is giving 6% now. Okay, this REIT, is it cheap or expensive? Thank you so much. It's cheap. So it's the reverse. For dividend yield, we want it to be the higher the better. Okay, dividend yield is basically the dividend divided by the price. We want it to be higher the better. So if we believe that, to buy this REIT, you should only deserve 5%, but yet now this one give you 6%. So of course, this REIT is cheap. Okay. So how do I actually determine fair yield? Again, there's 101 methods. So personally, I use this very simplified method. Okay, for me, it's very simple. If a simple method works, I use a simple method. I don't need to use a complicated method to, I don't know, boost my ego or, make myself look good. I don't need. Okay. I use simple method, and if it works, I stick to simple method. So what I did here is this. I just find the average dividend yield over the past 5 years. I use that as a fair yield. Again, so basically, my assumption here is this. So let's say over the past 5 years, when people want to buy this REIT, they only ask for 5%. Okay? So how I arrive at this statement is basically I just take a simple average dividend yield over the past 5 years. If people only ask for 5%, okay, Then now give you 6%, then of course it's cheap. And we now only give you 4%, then of course I think it's expensive. So this is how I determine the fair yield for a particular stock. Okay, average dividend yield of a particular stock. I just find the history to have a sense of, as an investor, what is the kind of yield that they have been asking for and the kind of price. Okay, so of course, like I said, different people have different way. You can say this is good, this is bad, to each his own. All I can say is, I have done this method long enough. It has worked very well for me lah. So we don't have to argue whether this is the best method, this is good, this one work or not. So to each his own. I only can share with you what I know, what I practice, what have worked for me. Okay. I just want to give a very specific example. Again, this is not stock tip. Please, remember my disclaimer. After this, you go and take action, make money. No, you thank me, you lose money. We never met. Okay, I just want to give you a very specific example how I actually, how I actually how I actually do the calculation. So if you go to the website, you will be able to find the historical dividend. Okay, like in this case, this is Paragon REIT. If you go to Paragon REIT, you are able to find, like I say, total dividend. Not dividend yield. Dividend means the dollar or the dollar amount. So total dividend that was being distributed in 2002 is actually 7.24 cents. 2021 is 5.4 cents, 2020 is 2.72 cents, so on and so forth. So you are able to collect all this data if you can just go to the website. Now, if you go to platform like Finance Yahoo, or you can just go online and just key in historical prices for a particular REIT, okay, then they actually can give you the daily prices as you can see here. Like for example, this is from Yahoo. You can get it from somewhere else also. This is the daily prices, daily closing prices. So what I did here is this, I just average it out. Like for example, I just go and average out the closing prices for 2023. So basically I just go and add up all the prices and just do a simple average. So in the end, what do I have? I have the average price for that particular year. Okay, I have the dividend. Like I said, this dividend I just simply copy from the website. So with that, I have the dividend yield for this particular year. Okay. And one last step here is this. Okay, so what I do is this, I will actually take out outlier. So obviously, in 2020, because of COVID, this is an outlier. I will take it out. And I'll just do a simple average for the rest of the year. So which work out to be 5.6% in this case. So what I'm trying to say here is this. If let's say if you are investor for this REIT over the past 5 years, okay, you will probably is only asking about 5.6% based on the various factor, the quality of the property, the risk level, blah blah blah, so on and so forth. Okay, you will probably only ask for about 5.6%. Okay, this is, or in fact, this is the average of what people are getting over the past 4 years. Okay, so with that, this is the fair yield for this particular REIT. So Paragon, if you ask me what's the fair yield, is 5.6%. So of course, I go and compare with the current yield. What's the current yield? Which is the dividend over the past 12 months divided by the current price. So I've done this, I think, like 2 days ago. So this is the price for 2 days ago, which also worked out to be 5.6%. Which means to say, if I buy Paragon REIT today, I'm buying at a fair price. Okay, I'm not buying cheap, I'm not buying expensive, I'm buying at about fair. Okay, so just to make sure everything is clear, so assuming that now the current dividend yield is actually 4%, would you be keen to buy this REIT, yes or no? Assuming that the current dividend yield is 4%, would you be keen to buy this REIT? Okay, no, obviously not, because the yield is lesser than the fair yield. So for me to buy this REIT, I will want the dividend yield to be at least 5.6%. So this is how I calculate the fair yield. It may sound very complicated, but seriously, after you've done it for the first time, okay, it's actually quite easy. Like I said, this dividend number, I simply just copy from the website. This average price number you can download. Okay, Finance Yahoo has it. A lot of other websites have it. I just average the closing price. Okay. And tada, this is how I calculate fair value. Okay. End of the day, you have to understand investing have to put in a little bit of effort. If you don't want to put in effort, only want to make money, sorry, yeah. Maybe try the casino. You lost money then, but at least you have fun. But for investing, you need to put in a little bit of effort and you get returns from your effort put in, which I think this is not too much. Okay, so with that valuation, so go back, you can do for Maple Tree. Okay, just now we talked about Maple Tree Logistic. The price actually came down. Then, is it because the news caused it to come down? Is it oversold? And how do you know whether oversold? We can do a dividend, this fair value analysis. We can go and calculate the fair value for Maple Tree. And assuming, okay, maybe I just go back to the slide. Now dividend yield is 6%. Assuming the fair value is about 5%, then it's like, hey, then maybe the news has caused the price to go down too much, for example. Then maybe it's a good time to go in. Again, not stock tips. I just want to share with you the thinking process, how we actually spot gems in the market. It's just at this point in time, maybe there is actually this opportunity. So I just quote as example. Okay, good. I have about 10-15 minutes more. Very good timing. I just want to do the last part. Okay, just now as I mentioned, okay, as a FA, we are very objective driven. Okay, so every time we buy stock, every time we do investment, we have to tie with the opportunity. We have to tie with a very clear objective. Okay, and the objective is should be very specific as possible. So for example, just now I did mention also, in fact, I think 70%, easily 70% of my investable assets, money I use for investment is actually in REITs. So why I do that is because I have a very clear investment objective now, which is to achieve financial freedom. What is financial freedom? My passive income, okay, is greater than my expenses. And of course, when that happens, I don't need to work. I can live happily ever after. And after my investment experience over 20 years, so in fact, if you ask me what is the best source of passive income, dividends. Dividends is the best source of passive income. No money just come into a bank account without you doing anything after you make the purchase. Okay, property rental, is it, if you go and buy a condo for rental, is it considered passive income? Yes. But that one not as passive lah. You have to go and look for tenant. You after that you have to go and manage the property lah. Okay. Then after that, tenant don't pay you money, you have to go and chase out tenant, blah blah, so on and so forth. But it's still considered passive income. Whereas for REITs are really passive. After you buy already, sometimes the money come in, I also don't know. How come got money come in? Okay. So that is what I want to achieve right now. I want to build a REITs portfolio. Okay, so of course, like I said, be specific. So I've calculated. So for me to achieve financial freedom, I need about $7,000 of 7,000 per month of passive income. So of course, eventually not all going to come from REITs, but a big chunk of them will come from REITs. 7,000. So what I'm doing now is basically I will just try to build my REITs portfolio. Okay, keep increasing my portfolio slowly, just keep building. Okay, so that eventually just the dividend alone can cover my expenses. So this is my objective, and I think REITs is actually very good at this objective. If you tell me that your investment objective is what, I want to get I don't know, 20% return per annum, then sorry, then REITs is not helpful. It's not going to help you. Maybe you want to try growth stock. Okay, maybe you want to use a more sexy instrument like options. Okay, maybe you want to do leveraging if you want like 20-30%. Okay, of course it's at a point of higher risk. Okay, so that's what I want to be very clear here. Okay, again, don't just like, wow, this one good buy, this one good buy. So be very clear what is your objective and whether is this instrument suitable for you or not. So just to put whatever I said in pictorial, so this is my plan. What this is what I try to do or have been doing. Okay, I think I started almost like 10, 15 years ago. What I've been doing, of course, along the way, there are always hiccups. Okay, so basically, ideally, what happened here is this: my salary come in, okay, 20%. Once the salary come in, and 20% will go into another bank account, and the money here can only go one way lah, which is to invest. So of course, I will actually put in the REIT. So basically, the idea here is this: I will buy REITs, or in fact, I intend to buy REITs every month, or what people call it the dollar cost averaging approach. I do something very similar to dollar cost averaging. Okay, the only tweak is that there must be REITs that pass my test. There must be suitable REITs for me to buy. Okay, so later I'll give a simplified illustration for you to be clear. So basically the idea here is this, I don't really time the market. Okay, like I said, that is not FA. My objective now is to build a REITs portfolio. Okay, and how I try to do that is accumulate every month that'll be accumulating. So of course now I'm in a state whereby I have dividends coming in. Sometimes I do sell, okay, but for REITs, not really lah. I do sell only when I lose confidence that it can continue to give results. So let's say, for example, if I one day believe that retail malls are going to die, or if one day I somehow believe that okay, people don't go office anymore, then I'll probably sell the REITs. Okay, basically I won't sell the REITs because now the price very high already. I want to sell them, buy back later. No, I don't do that. So be very clear lah. Okay, there are people who want to do everything. I want to be a trader, want to be a FA, on a TA. In the end, what happened to them? They lose all their money lah. Okay, so personally, I have a pot of fund that just do accumulation. So the money I don't touch one. Also, in fact, now when I buy REITs, I don't even record down what is my purchase price because it doesn't matter. I'm not there to trade. Okay, the only reason why I sell is I lost confidence in their capability to give dividends. If not, I'll just park there. I'll keep accumulating because end of the day, I want to build a REITs portfolio. If you keep trading, buy, sell, buy, sell, buy, sell, then will your portfolio grow or not? It doesn't. Okay, so that's what I do. Then dividend. So I have dividend coming in. Then of course I have salary. So ideally this one will continue like every month go and buy, 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 buy. Then eventually, you will come to a state whereby the REITs the portfolio is large enough, with the dividends can cover my expense. Then that's it. And I'll live happily ever after. And for those of you who want to listen my talk after I've achieved this state, sorry, I have to fly to Bahamas. Then after that, wait for me outside 2 coconut tree, and wait there for 3 days, 3 nights. Then maybe I come and share. Okay, anyway, it's always good to dream. Okay, that's my dream. So anyway, um, if you ask me, this is actually the most important slide for the whole evening. A lot of people always so focused on product. They always think that, I buy today, sell tomorrow, I'll make a little bit, I'm happy. No. So in fact, it's very important to have this overall structure, overall framework in mind. So this is mine. And of course, if everything works well, okay, I am, going to achieve financial freedom. Okay, so every month, what's going to happen? So every month, there's actually a REIT selection process. So number one, okay, very important. 39 REITs. What you need to do is all these 39 REITs, you only focus on REITs whereby you like the properties. End of the day, you are investing in properties. Okay, you must like the properties. Like for example, again, this is personal. I just quote for example. Like this year, I'm not touching any US properties. Okay, because I don't like them. US somehow very interesting. I don't say US. Okay, so somehow very interesting. In COVID, everybody work from home. But when it's time to go back to office, somehow all the Singaporeans all go back. All cannot tahan stay at home already. All say, I want to go crazy, stay at home. But somehow in US, all of them don't want to go back. Okay, so in fact now they are forcing them to go back. So that's why for US REITs they got affected quite badly lah. Okay, for that particular reason, I am not convinced that they will eventually go back. So this year I'm not touching US property REITs. So end of the day, be very clear. So I think in the end of 39, again, don't ask me which one. I probably only focus about 20 lah. 20 REITs. Easy. Okay, no, sorry. I think the last I checked, I got up to 25. So easily got about 13, 14 REITs. I will never touch on because I don't like the properties. Okay, don't ask me which one. So I left with about 25. Then after that, I'll do the loan test. I'll do the two loan tests. Gearing ratio must be less than 40%. Interest cover more than 3. So again, I sieve down. Then after that, I'll do the valuation test. Just now I actually explained how to do already. So for those who pass the valuation test, then they are inside my watch list. Okay, so every month I do that. But if you think about it, after a while, it's quite similar process. Of course, the first time you do take a bit of time. After a while, actually very fast. So let's say, for example, if there are only about 6 REITs here, and assuming that every month I have $2,000 budget to buy. Okay, if there's a 6 REITs, then spend $1,000 to buy REIT A, then 1,000 to buy REIT B. Okay, then after that, next month I repeat the process. Okay, against assuming only the 6 REIT, then after that 1,000 I buy REIT C, 1,000 I buy REIT D. Okay, then next month so on and so forth. So I continue the process. If let's say, for example, this particular month got no REITs here, then I don't buy. Okay, that is my only tweak to the dollar cost averaging. Or either that, okay, this month there's only one REIT that worth a buy, then I buy one. So instead of spending 2,000, I spend 1,000. Okay, so basically, so far, I can always find REITs to buy lah. So I've been, the dollar cost averaging method, I think it can work. Okay, of course, there only one rare moment I remember I only bought like 1 instead of 2. And yeah lah, of course, I think that 1 or 2 months I bought 0. Okay, and the last rule here is this: diversification is key. If you ask me, between, let's say, you are very clear that REIT A is better than REIT E, for example. Okay, you are very convinced REIT A better REIT E. So if you ask me, should I just buy REIT A only or buy REIT A, B, C, D, E? My answer is buy A, B, C, D, E. Okay, unfortunately, as a retail investor, there's only so much we know. Okay, so for us to manage the risk, it's still good to diversify. So basically, I will repeat the purchase only after buying 5 other REITs. Okay, so this is what I do. So my point here is assuming only 4 REITs come here every month. Then after that, for the next after I buy the 4 REITs, for the next 5 months, only the 4 REITs, then I'll stop buying already lah. Okay, I have to buy 5 other REITs first, then I will buy back the same REIT. Okay, because diversification is very important. So of course, if you combine the 2 pictures together, okay, eventually, every month you do this, is become like a snowballing machine. So one day, slowly and surely, okay, dividends can cover expenses, financial freedom, live happily ever after. So please, if you ask me, wow, this whole session very complicated. Okay, if there's only one thing you can take away from this webinar, hopefully this is the message. So please have an overall investment plan. What is the objective you are trying to achieve? How does this instrument help to achieve the objective? So that, if you ask me, is the key. So I've given you an example of how REITs can help you achieve the particular objective of financial freedom. Okay, again, please don't take this as stock tips. I just want to give you some examples based on the factors. Just now we talked about the factors. Okay, like for example, this period, okay, historically speaking, these are the 3 REITs whereby the NPR up, DPU is up, gearing ratio is past my test, interest cover past my test, or below 3, either above 3, 3 or above. So if you ask me, that means this will be in my watch list. This will definitely be my watch list. So if I were to buy, I buy first this month, buy first first, second, then next month buy third, fourth, so on and so forth. Uh, and currently those DPU down one, I will also consider, okay, I will also consider based on the fact that because a lot of the reason why DPU down is because of the interest rate issue lah. And now interest rate, are we expecting interest rate to go up or come down? Can anyone help me here? Are we expecting the interest rate to go up or come down? Come down, right? So that's why I am making a consensus here. So even this is down, okay, I think it's okay as long as NPI is up. But if let's say those NPI down, DPU down, that one definitely won't be inside my watch list. Okay? So I just want to give you an example. Okay, so basically you want to find REITs that pass all these criteria have on this example. Of course, you must like the properties. As I mentioned here, you can see like none of them have US properties. Okay, so again, I'm not saying US property is bad. It's very subjective, it's very personal. It's just like, okay, some of you like BMW, some of you don't like Mercedes, some of you like Mercedes, some of you don't like BMW. Okay, okay. Not saying that I don't like means it's bad. So please don't mistake me for that. Okay, good timing. So with that, I come to end of the content of the webinar. Of course, please stay back to answer to go through the questions. REITs price may be bouncing back. So remember the first chart, but please don't rush in. Okay, 39 REITs what to choose from doesn't mean all is good. Know how to differentiate them. So you differentiate the REITs with what? The properties. You must like them. Okay, the MPI, the DPU. Hopefully by now you know what is it. MPI stands for what? Okay, help me here. MPI stands for what? Anyone can help me? What does MPI stands for? Net property income. Thank you so much. DPU leh? DPU stands for what? Okay, distribution per unit. Thank you so much. Or either dividend per unit is about the same. Okay, so these are the factors to look at. Then of course the loan criteria. So I spoke about two loan criteria. Okay, what are the criteria? Gearing ratio must be more than how many percent? Sorry, gearing ratio must be less than how many percent? Sorry. Less than gearing ratio, less than 40%. Thank you so much. Interest cover must be more than how many times? 3 times. Thank you so much. Okay, so this is how we can differentiate the 39 REITs. Then again, like I said, most important point, be clear on the investment objective and know the limits of REITs. So seriously, if you want to really double your income at the shortest possible time, you want to enjoy capital gain. Not say REITs don't have capital gain, but if you actually want to target capital gain, you don't care about dividends, you just want $1 become $2. If you focus on REITs, you won't be very happy lah. So or put it this way, there are other instruments that can give you capital gain better or at the expense of higher risk. Okay, that's it. Thank you so much. This is where we can get connected. For those who are still on Facebook, this is my Facebook page. Please like me, facebook.com/I'm Chua, or either that you can scan our QR code. So that any questions after today's session, you can ask me there. But please take note, I'm not allowed to answer what you call that, counter specific questions. You cannot ask me, hey, this week can buy, cannot buy. Sorry, I cannot answer that. But anything to do analysis, I'll be very happy to help. Of course, now and then I do share my investment thoughts. So facebook.com/I'm Chua. So of course now also have to be on Instagram. This is my Instagram account. So both will be able to reach out to me. Okay, good. Your last chance to key in the questions. You may want to scan. Okay, just now I think I saw some question on the chat. Like I said, please put the questions onto the pigeonhole. I'm not sure whether I can trace the question from the chat. Then I will answer the question from the chat. Okay, let me go to the pigeonhole right now. Is it a good idea to use CPF ordinary account to invest in REITs? Personally, again, you talk to different people and different opinion. I just can share my opinion. To me, right, so what is the objective again? Personally, I use CPF as my last line of defense. Okay, I use CPF as a reserve. Okay, whatever investment you do, right, there is always risk. There is always a chance to lose your money. Okay, so personally, how I structure my funds is CPF money. I'm not going to touch. I'm going to put it there anyway. Give me 2.5%, even 2.5%. Of course, some even 4%. I think it's very good. Okay, 2.5 is actually decent enough. Okay, so that was my last line of defense. If I lose everything, lose property, lose stocks, whatever, whatever, at least I still have CPF. Okay, so personally, I don't do it. But of course, if let's say you have some other reasons, you don't like CPF account, you have worried that one day CPF account will be stolen or whatever, whatever, then maybe you do it. But so the point I put it here is see what is your objective lah. Uh, or I think CPF is actually very good as a last line of defense, so I'm not going to touch it. Okay, but if you think that no need, you have other last line of defense, then maybe of course you can go ahead. How often do you do the loan and valuation test? Okay, so if let's say for example, if you do on a monthly basis, right? So every time you want to uh buy the REITs, then you do it lah. Okay, but of course, like valuation test, you can see is past 5 years, ma. Okay, so the whole year the numbers won't change. So let's say in 2024, if I do one time already, that value I can use for the whole year lah, because I'm looking at the past 5 years data. Okay, and if you talk about the loan test, very easy lah. You can just go to the website, the data is there. So take less than 2 minutes, you can get it. Okay, so to answer your question is, every month, if you want to do this every month, then I have to do it every month, monthly lah. Okay, I'll do it monthly. How will offering or green notes preferential offerings affect REIT's price and dividend? Okay, of course, I think this question is a little bit generic, but what I can say here is this, so generally speaking, the REIT's price, or at least historically speaking, has been quite affected by the bond price, which is of course affected by interest rate. Like for example, when the interest rate was high, so the REITs was affected two ways. One is of course because the REITs they had to pay higher interest. That's why the what do you call that, the REITs price was actually affected. Now the dividend affected REITs price. Okay, the other reason why high interest rate affect REITs price is actually because um the bonds become more attractive, the fixed income become more attractive. Again, you think about it, so the main people who buy REITs are actually are actually going for dividends or fixed income. So if let's say you buy REITs, get 5% dividend yield, and assuming if I put money in the FD, also get 5%. So obviously I will sell REITs and put money in FD lah. Why do I want to take the risk? I myself just put FD, at least I know that the principal is more or less protected. Okay. So in that sense, I would say that REITs is more affected by interest rate rather than a particular instrument. Okay. As for green notes preferential offerings, unfortunately, I don't have any statistics or data to share. So, I would think that it's more of the interest rate that affect the price and dividends. Okay. How does issue of new units under uh okay? I'm not too sure. Okay. I hope I answered your question correctly. Yeah. So basically, if let's say for example, instead of dividends, you get new units. Okay. That's what happened now. So let's say so you can do it this way. Let's say for example, um, I'm supposed to give you $1 of dividend, but you say don't want join unit. I use the $1 to actually come and buy another unit of REITs, then I pass to you lah. Okay, so you don't get that dividend, but eventually you got more units of the REITs. So I don't know if that is what you're trying to ask. How is the dividend affected when the stock price of REITs go down? Okay, so basically, so be very clear, there's actually this thing called dividend. There's actually this called dividend yield. So dividend is just the dollar value. Okay, you get 5 cent dividend, 6 cent dividend. Dividend yield is when dividend divided by the price. Okay, so to answer your question, okay, if the stock price go up and down, it doesn't affect the dividend. Okay, whatever that they give you is still the same. Dividend not affected. But the price go up and down, of course, it affect the dividend yield. Okay, because dividend yield is what? Dividend divided by price. Can you clarify what is the valuation? Fair value, fair yield. Okay, fair yield. I actually calculate the fair yield. What's your view of REITs manager sponsor restructuring the property asset in a REIT? Do you have specific examples? So anyway, okay, it's quite common, especially those who have a lot of properties. Like for example, industrial REITs, the property a bit small. Like Sanders, if I'm not wrong, got 100 over 200 over properties. So it's actually very common for them to buy and sell properties. Okay, very common for them to buy and sell REITs. But if you talk about office REITs and commercial and retail mall REITs, they seldom buy and sell lah. And if you talk about restructuring means what? That means like you know, change the property type. Okay, we seldom see that situation. So even if it does, also we have to see on a case by case basis. Okay, it's very hard to generalize. Okay, so yeah, unless you have a very specific example, then maybe it's very hard to for me to comment on a generic basis. Assuming you are doing the loan test mentioned on 25, the number should be same every month, at least. Yeah, as I mentioned just now, the valuation test is going to be the same. That's what I mentioned, right? Correct, right? So I said plus 5 is going to be same. The loan test is slightly different, okay? Gearing ratio can change. Of course, not per day lah. Gearing ratio actually can change on a quarterly basis. Okay, debt divided by equity, that one can change on a quarterly basis or half yearly basis. Of course, also not monthly lah. Also not monthly. Okay, it's more change on the late. Okay, once you have a new, what do you call that? Financial numbers, it will change. Then if you talk about interest cover, so same thing lah. It's either half yearly lah, every time you report. Okay, yeah. No, I don't repeat the test. Usually I don't repeat the test. Yeah. Would you buy REITs with a big overseas exposure? So it depends on your familiarity with property. End of the day, it depends on the property lah. Okay, end of the day, it depends on property. There's already saying, invest in whatever you are familiar with. Okay, there's actually so many things for to choose from. So unfortunately, for most of the REITs, they confirm have overseas properties. Okay, so in fact, if you actually want to buy REITs with only pure sale property, I think there's only two. I think one is Sabana, the other is Far East, something like that. Only two. So the rest would have overseas properties. So if let's say I'm very confident about that or I'm familiar, like another reason why I don't like US is because I'm not from the US. So frankly, uh, somehow my life I don't have to go US very much. And every time I go there, I don't really like it. Okay, so I am not from the US, so that's another reason. But if you ask me, like for example, China, I am still waiting. Eventually, when China start to pick up, I will be still interested to go in. Okay, Europe, not so much. Okay, uh, based on what is available not so much. So again, it really depends on the property, whether you're comfortable or not. Okay, great. I believe I have cleared all the questions. So really, really thank you so much. Hope the session has been interesting. Uh, uh, can you share the framework again? Okay, okay, there's I just saw this question on the chat. Since I see it, maybe I just okay. So maybe I just show very quickly. So I think you're looking for this. Okay, for Vincent, right? So this one is the strategic investment. This is the overall framework I have. Okay, from a very strategic level, how I intend to what do you call that? Okay, build my dividend portfolio. And this is on a monthly basis, the criteria for me to choose my REITs. Okay, good. Okay, so with that, thank you so much. Hope has been interesting. Hope you pick up some information. Of course, I have other webinars, some free, some paid. Now sometimes I have to attend the paid ones. Okay, cannot always attend the free ones. Some free, some paid, some free ones. Hopefully I get to share with you more in my future what do you call it, webinars. So with that, thank you so much. Have a good evening, and I hope to see you again very soon. Okay, bye bye everybody. Bye bye. Thank you so much. Okay, thanks for your comments. Thank you so much.